Welcome to Ag Marketing IQ In Depth. Today we welcome Jim McCormick, COO at agmarket.net, long a partner of Farm Futures. And we're discussing a little bit about what's happening with China and getting a little deeper than the headlines and the sound bites. It's nice that we're hearing that we have a deal, but what are the specifics of that deal and what does it change? Jim, what do you think?
Well, like I said, it is very nice that we have a deal. The market definitely, Pam, has responded positively to it, way off the fall lows. Right now the market, I think, is looking for a little bit of clarity because we are kind of getting some mixed messaging out of Washington. When the deal was announced late last week, Scott Bessent, who was actually the deal maker, I would argue, he's the one that brokered the framework. He was mentioning that China had committed to buy 12 million metric tons of beans through the end of the year, and then 25 million metric tons for the next 3 years. And that is very, very good. But there's a little bit of confusion there because over the weekend, the White House came out and said they're going to buy 12 million metric tons over the next 2 months. And this is where the confusion to the industry is right now. Because if you listen to Scott Bessent, it's not quite as impressive as it sounds because we've actually sold and shipped China about 5.9 million metric tons of beans in this calendar year. So if you're talking a calendar year, that means if you listen to Scott Bessent's headline, that means they've got about 5.9 million more metric tons of beans to go. If you listen to the White House messaging, it is 12 million metric tons in addition to the 5.6 or 5.9 we've already shipped to them. And that's definitely a little bit more impressive because you're talking an additional 220 million bushels, and hence the little bit of uncertainty. But the market did rally on that news. Like I said, I want to stress it is good news because the market doesn't like uncertainties. And we've pushed over $11 on the spot month beans. You've pushed up toward $11.50 for July beans. Now the $1 million question is what's going to happen next? And, a little bit more clarity is going to be key for that next leg.
Well, and those numbers are significantly off what we were seeing for buying before all of this trade war business started.
Exactly. And this is where, if you're a producer out there and you've got beans in your bin, if you got them in the bag, I think you got to be a little bit more proactive on this rally because depending on however this plays out, whatever the number be it Scott Bessent's number or be it the White House number, the fact of the matter is they're not buying as many beans as we thought they would buy pre-trade war. Okay. Mm-hmm. So if you look at the balance sheet, and we're going to get an updated balance sheet here in a couple of weeks on the November date. Report is now going to be a few days later. What you should see is not a dramatic adjustment in the balance sheet because this deal did not bring new beans to market. It just solidified beans that were not being bought due to the trade war and confirmed they will be bought. Now, what's also happened, Pam, interesting, is during this trade war, essentially, as China was ignoring our bean market, they were buying a lot of beans from Brazil and Argentina specifically. We started picking up a lot of smaller business because they were getting squeezed out of those two countries. Well, once this announcement happened late last week, we've seen an absolute reversal in the world pricing of beans. And right now, Brazil is offering beans for sale from November all the way through the end of June at a cheaper price than what we are offering them for. So some of that business we had picked up recently, I'm fearful that essentially we're going to lose some of that back to the Brazilians. And like I said, eventually this carryout's still going to be around 300 million, which I would argue fundamentally is hard to argue much over $11.
So as we're looking at what should a producer do between now and November 14th, sounds like maybe they need to sell into this rally.
Our recommendation is you need to mitigate risk. I mean, either way, you could sell grain straight out of, sell some cash grain. Say, look, the market's rallied. If you're in the northern part of the country, we've seen a very good snapback in basis because they are trying to ship beans out of the P&W. So the basis has improved. We would argue reward this rally. You can always use the board, use an option play to mitigate some risk and keep your in for the what if. We'd also argue maybe selling some 2026 beans because that argument is still way up in the air about what we're going to plant. I know the prices aren't great, but you could put in a floor with an option strategy around $11, which is say, hey, worst case scenario, I'm $11 beans. It's not great. But if you look at where we're at just a few weeks ago, that is a very good price. And a lot of this, Pam, is going to hinge on what happens in South America. If they have a very good crop and they're planting extra acres by all accounts, and they have trend line yields, the world is going to be flush in beans, and that would argue that would be negative price in beans into springtime and particularly the fall if we had follow up with another big crop.
Yeah, so that brings another question too. We're hearing that Brazilian farmers aren't in good financial situation either. Could something happen down there to impact the price?
It could. I mean, your situation, like I said, they're in their planning phase right now. Do they adjust? Do they not plant as many acres as we think? Because remember, this is just a survey of what we think. We saw how the farmer survey in May and June, or for the March quarterly stocks and acreage number and the June were wildly off by the time we got to the final numbers. So these acreage adjustments still could happen in Brazil. The other thing is still just the wild card. Let's face it, the weather right now we're dealing with, not just in the United States,
Mhm.
but around the world, seems to be extremes. Either you're getting a lot of rain or you're getting no rain, type of situation. If you're getting cool temperatures or extreme heat. So, a good crop in South America is not a guarantee as well. And if they would stumble, and what this commitment from China for this year's beans, and especially for next year's beans, it could get interesting if they do have a weather problem.
So sell a few beans now. If you're a U.S. farmer, look to maybe sell some, not just this crop, but 26 crop, and then know your break evens and cross your fingers that South America stumbles.
I think exactly. I mean, the reality is right now, I think you got to you got to find your cost of production. You try to drill that down as far as you can so you know where you can market grain. So you can make that decision, because part of the problem we're seeing right now for farmers trying to market grain, it's very, very emotional right now. We've been under a lot of economic stress the last couple years. There's no doubt
Mhm.
about it. The prices have rebounded, but unfortunately for a lot of producers, even with this rebound in price, you're still not above break even. So there's a lot of stress to it. And then you get these emotional moves up where the market just surges and people get locked into the excitement of the market and forget to market grain. And we like to encourage people at agmarket.net, figure out where your profitability is and market for profitability. If you're marketing for profitability and not trying to pick the high, trying to market at the ultimate highs, history would argue you're better suited for the long-term success.
Yeah, make a little bit of a margin instead of holding out for that home run.
Well, exactly, because partly what's going on right now, what we're going to be dealing with is we at American agriculture just get transfixed on what's going on in the United States.
Mm.
What's going on in the world is going to have a deal. We have this China deal we mentioned at the beginning of the conversation. But the fact of the matter is that is a deal that has not been signed yet. So it
Mhm.
could fall apart today for all we know. It has been interesting. We have heard a lot of comments from Secretary Bessent. We've seen a lot of comments from the White House about this trade deal. But the fact of the matter is we have yet to hear any comments from China. And for me, honestly, that's a little bit unnerving. I'm hoping they do follow through, but it could fall apart. The other thing, just kind of interesting in the overall dynamics of where we're at, it's interesting. A lot of this deal, Pam, had to do with rare earths. That was the big catching point because we need their rare earths, unfortunately. We're trying to move away from them, but it's going to take years to build out secondary suppliers. So we are kind of stuck in this rare earths argument. Well, what was interesting on this deal, you might notice the rare earth ceasefire lasted about a year. That's it. But the grain deal was a multiple year deal. So I'm a little bit skeptical that we're not going to go through this again and we're going to have more conflicts that could move away, and all of a sudden China cancel purchases if it got ugly. So when you have that opportunity to market grain at profitability levels, we're going to tell you to go ahead and take advantage of it.
There you go. That sounds like the message today. Act now, cross your fingers for later, but don't put all your eggs in that China basket.
Well, exactly. And the tools that are out there, I mean, you can sell cash grain, you can use options on the board that allows you to re-own some grain with a lot less risk. You don't have to go into the futures game, but the game right now is to be profitable. And like I said, the world we're in, it's going to be very, very challenging. You can see how the emotion of the market works. Look at the cattle market. I mean, it was on a 3-year bull run. The headlines changed, the storyline changed, and it just absolutely was just an actual train wreck, to be quite honest,
Right.
price wise here. And it seems to have stabilized here recently, but you can see how quick the narrative changes in our world. And the funds we trade right now, they're a different beast than they were when I started this business 20, 30 years ago. It is all about momentum up, momentum down. So right now, the beans have got the momentum on their favor. But if you situation where that fund says, hey, for whatever reason, I want to get out. Is it a change in the storyline from China? Is it a change in the US dollar policy? Is it a change in our renewable standard or renewable policy? Anything could change in a heartbeat, and you see how quick it moves. So like I said, the key right now is to know your break evens and get the orders working in the market when it's profitable, not when you have to.
Thank you, Jim. That's some great advice for farmers out there. The soybeans are in the bin, the corn's in the bin. Let's see what we can do to move them out, and we'll see what happens next week. Thanks a lot for joining us on Ag Marketing IQ In Depth. Always glad to have you.